please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
In the summer of 1969, overnight, on the whim of a Prime Minister, without debate in press or parliament, 14 private sector banks were nationalized. The feat was repeated in 1980 with 6 more banks. Today, public sector banks with total assets of over 70 lakh crore rupees stand at the crossroads. As citizens, we need to reimagine their future. But this time, we want to do it with abundant debate across the nation involving the best minds in the country. CNBC TV18, as the country's premier business channel, has taken up this responsibility to conduct these discussions on catalyzing public sector banks. We are calling it PSB 2.0. And today, to take this discussion forward, we have with us someone who has been in government and in the Reserve Bank, been the banking regulator and the monetary authority for a very long time. I have with me Dr. Bimal Jalan, former Governor, Reserve Bank of India. Dr. Jalan, thank you very much. Sir, at the outset, this is not a fault-finding mission. This is a mission to look for correctives to the public sector banking system, which appears to have more problems than the private sector banks. If you look at NPAs, for instance, the worst case in the private sector bank is about 7.5%, but the worst case in the public sector banks is 25%, and there are about half a dozen banks with NPAs over 20%. The biggest of them, State Bank, has NPAs of over 11%. And now we have a new threat of frauds as well in the public sector banking space. So first up, sir, not to find fault, but really where is the problem? Is it poor regulation by auditors and the regulator? Is it indifference and lack of motivation in the management of public sector banks? What's gone wrong?
You know, Lata, this is a very important issue you are raising, and I just want to make one point to you to begin with, that public sector banks, are part of government. So as you can see, in terms of the functioning of our government, there may be many problems in terms of execution. Yes. You see what I mean? In the sense that you have a whole structure, the administrative structure in our country is multi-layer. So if you want to do something, it requires a lot of permission and lots of movement of the files from one ministry to another ministry to somewhere else. So the main issue is in terms of take public sector bank as part of government, and just as in terms of education or in terms of health or in terms of insurance, you want these services to be delivered.
Yes.
So the main issue that we have to tackle in the future is that not that public sector banks are not necessary. They are, in my view, an important instrument to outreach the people. You have private banks you talked about. They are very good and we are very proud of them. But if you look at the outreach of the private sector banks, they will be much more limited than, say, outreach of the public sector banks. When we are talking about public sector, take it in a larger context, that we are talking about delivery of banking services to the people.
Yeah, I take your point.
Now, to come back to your main question, is that what is it we can do to improve the functioning of the public sector banks? And I think the main issue that we have to grapple with is that public sector banks, which are spread all over, decentralization. I am in favor of decentralization of the process. The government should decide on policy.
Okay.
That public sector banks or priority sector lending or what the interest rate should be and so on and so forth, that the Reserve Bank decides. The two combination, the Reserve Bank and the government,
yeah.
They would decide what should be the policy, what should be the interest rate, what should be the outreach and so on and so forth. But the governance part, that is how a public sector bank should be run, that must be delegated and decentralized to the what you might say an autonomous agency. We have banking board bureau and so on and so forth. But I would say that what we need to do is, you think of public institutions like, say, UPSC.
Okay.
If you look at UPSC, if you look at the Election Commission, they are public institutions and they deliver. I mean, the largest free and fair elections in human history is delivered by Election Commission.
Absolutely.
If you look at all our IAS administrative system, it is through the UPSC. So what I'm saying is essentially, I'm trying to emphasize, and you ask yourself the question that why is it that we have institutions of this type, we have institutions of CAG type, and they function very well, because they don't have to report to the ministry. But what they do, they are accountable to the parliament. So supposing now today, if you took a look at the public sector banks and you have a banking bureau, so you don't need a department of banking per se.
Do we need 70% of the banking sector to be dominated by these kind of banks? That is government-owned, majority government-owned banks. Should we look for a legislative change whereby the government owns a smaller number of banks and some of them the government allows its stake to fall below 50%, so that what you exactly say, you know, administrative controls are reduced?
No, but I think you should, you have to first concentrate on the functioning of different public sector banks. I mean, supposing we have set up a public sector banks in an area where the amount of business is very small, where the organization is very difficult to have with top-class bankers and so on and so forth, then the best thing to do is to close that bank, for example, because it's non-functional. I'm just giving an example that if something is not functioning, if something is not delivering what you have set it up to do, then close it.
Okay. Okay, so you would go to the extent of closing down some of the public sector banks will not be a bad idea.
No. If they are non-functional, if they are making large losses, if the fiscal cost that you are incurring is much larger than the benefit that you are getting from having that particular bank, you can close it.
I spoke to Dr. Ahluwalia earlier on this same topic, and he was suggesting that, you know, government can have a big voice in the strategy of a bank, even if it held, for instance, 30%. Is that something that you would recommend?
No, I don't recommend, but I think when you're talking about Monte Ahluwalia, he's a very thoughtful person, and there can be different views. I mean, of that there is no question.
Okay.
But what I am trying to emphasize is that the main part that we have to try and tackle is the relationship between what you might call ministries of the government,
yes,
and banks of the government. You know, you see what I mean.
Yeah, you don't want the Department of Financial Services.
Of some of our public institutions.
You don't want the Department of Banking Services, you would rather have something like a UPSC.
No, but if you have the Department of Banking Services, the Department of Banking Services will be monitoring the progress of how the government money is being spent. So that's different. I mean, the example of UPSC, etc., that I gave, that it is not the public sector part of the problem. It is what we are doing with a particular institution and in making it function much, much better than what we are at the moment able to achieve.
What, according to you, is ailing the current system, especially that big fraud of $2 billion that's dominating headlines? Would you say that this is just a localized failure of checks and audits? Or would you say that, you know, it's been a more larger failure, that the Reserve Bank failed in its regulation, that auditors failed? Is it a larger systemic problem?
You see, this issue has been discussed, you know, quite. This is very, very distressing, what has happened. And we have to go and see exactly why it happened. I mean, how do you allow this kind of functioning of a bank over a period for 3-4 years? If there are some abrupt thing, then you can say, yes, this happened and this was abrupt and we have handled it.
Yeah.
But if this particular problem has been prevailing in a public sector bank or for a long time, for a fairly long time, then that should be tackled. And it is, if the officials and so on have been doing something, then the board is responsible, or then that scrutiny, audit, etc., that should be something which would reveal what is happening. And that can be completely, it has nothing to do with public and non-public. It is the governance part. Why did this happen?
Okay. You know
that you can lend this amount of money to one company. How? I mean, this is not something which can be done overnight.
Let me come to another tricky point, sir. Whether it is the UPA or the NDA combinations, political parties have not encouraged, have not even entertained the idea of bringing government stake below 51% in any of the banks. Do you think that this is going to be politically unsellable?
You see, no, I mean, that's a very important issue, politically unsellable. I mean, I don't think this is politically unsellable as long as these are government banks. So if you decide, supposing, to lower the amount of holding, I mean, you can do it. I mean, because it saves the shareholding of the government and it has the money. But it doesn't resolve the kind of issues that we have been discussing.
Okay, well, let me go a step further. You know, if we have to reduce the stake below 49%, first of all, it cannot be governed by the Banking Companies Act. As Dr. P.J. Nayak had said, we should probably move it to the Companies Act. Now, if one does that, then boards can be more independently appointed. They will reflect shareholding. There can be independent board members. Right now, under Banking Companies Act, they are government officials who are board members. So, bringing down below 49, accompanied by banks moving, say, to the Companies Act, can mean complete reconstitution of the board, can mean competitive recruitment. Can't it be, more than just cosmetic change?
No, but these are not interrelated. You can, for example, supposing you have reduced it to 49%, but it's up to the government to decide exactly what the governance system would be, still a majority holder. Just as in the in private sector banks or any other bank or any other institution,
okay.
I mean, including media, I mean, it depends on how much, it doesn't depend that much on, I mean, it should be 51, that is majority of 51, more than 50. I mean, you can, whoever is the major shareholder, they decide.
You would still say that a legislative change is needed, or would you not?
Yes, yeah, I mean, that's also, yeah, that can also be done. I mean, that's not a problem. If I find, I mean, which we are doing day to day, every day. Mm. I mean, you introduce Bankruptcy and Insolvency Act, for example.
Yes.
I mean, that could have been done 2 years ago or 3 years ago or today. I mean, so and today we have the great advantage of having a government in power with a majority. It's not like 1989 to 2014, when we had 9 separate governments with short-term, with very short tenure, and then 20 parties meeting, and getting together and so on and forming a government. So now today you have the opportunity to make fundamental reforms. Okay. And I hope that will happen.
Okay. Well, on that optimistic note, sir, thank you very much, Dr. Jalan.
Nice talking to you, Lata, as always. Okay, thank you.
Okay. Well, that was yet another doyen of Indian banking and financial sector saying that the government needs to change its fundamental approach. What Dr. Jalan says is not enough that if you only bring the stake down, while that will be welcome, it should be accompanied by running the banks through a body as independent as, say, the UPSC or the CAG. We have to take a break. On that note, we are coming back with another expert on the financial sector. Sanjeev Sanyal, the economic advisor to the Finance Ministry, joins in. Welcome back to our special series, PSB 2.0, Reimagining Public Sector Banks. We are now joined by Sanjeev Sanyal, economist, author, and advisor in the Finance Ministry. Sanjeev, welcome to the show. Well, let me start with the record of PSU banks appears to be getting worse. The NPAs of private banks as of the third quarter ended December 31 was 4.5% of their total loans, while that of PSU banks are at 14%. The worst private bank NPA ratio is 7.8. The worst PSU bank NPA ratio is 24%. To what would you attribute this rather difficult performance?
I mean, there's been now a, this information you provided is well known and well understood by both the policymakers and the regulator. This is a legacy in many ways of the previous government. We need to separate two issues that are now getting confused. One is the issue of outright fraud, which has, of course, been in the newspapers recently. And of course, nobody has covered themselves in glory on this. We need to look at, obviously, the internal controls of the public sector banks. We need to look at the auditing mechanism. And finally, we also need to relook at the regulation and supervision process. All of that needs to be tightened.
No, Sanjeev, I'm not trying to make this an NPA discussion at all. The reason why I brought up those numbers was only to say that you know, the banking system was the victim of the same economic slowdown, is subject to the same regulation by the Reserve Bank. And, you know, whether it is the coal scam or the spectrum decisions, it affected the entire sector. But the public sector banks have come out looking worse. Even in the fraud issue, the public sector banks are, you know, coming out looking worse. Now, is there something we have to tackle in terms of ownership, governance, management of public sector banks per se?
So I think the issue you're raising is that there is a moral hazard problem at multiple levels. And I think, since you're hinting at it, is there a plan to privatize them in any immediate sense? So let me take that head on and say that there is no immediate plan to privatize these banks. Having said that, it is understood this moral hazard issue that you have raised is a serious one, and we need to tackle with it. There needs perhaps to be a wider public debate about this issue, and not just about ownership, it also about how the regulation of these things work and so on. So I think there needs to be an issue, but as things stand, the issue is being handled. Whatever we do with these public sector banks, consolidation, differential growth strategies, whatever it is, narrow banking, and so on, perhaps even in some cases privatizing, whatever it is, the current immediate effort is the following. One is to tighten up the regulation and supervision of these entities in order to control for all these frauds that you have mentioned. The second issue, and I keep emphasizing this, is that we have this legacy NPA issue for a long time. And we have finally recognized the problem, and we are, thanks to this IBC process, which you mentioned, has been a success, so at least so far, we now need to make sure that the last leg of that gets carried through, and which means that we have to pay attention to the auctioning and resolution process, which, as I said, is now boiling up. So, you know, we are in the last leg of it. We need to nail it down and make it work. So this is the critical thing. Afterwards, we can get into all these other things. This is an issue that is live, and we need to make it work.
No, I'm not at all denying that that problem is being tackled and tackled very well. But should we not start a discussion whether government stake needs to be brought down, not privatized, but at least brought down below 50%, which will enable these banks to recruit competitively, reduce administrative layers, and therefore quick decision making?
So, as I said, this is not the immediate plan, but if you're asking me, should there be a debate about it? Absolutely. There should always be a debate about these things. That's how you keep public policy accountable. If there's anybody who is an advocate of feedback-based governance, then I am it. But let me also add here that let me give you the other side of it. There are public sector banks do play many other roles which cannot be maybe measured in purely profitability terms. There are social inclusion issues. There are issues, for example, when you did demonetization. This is not about whether demonetization worked or not. That's the separate debate. But when you want to do something like demonetization, again, public sector banks are the key way you carry it out. You want to have Jan Dhan Yojana and other these kinds of things, social inclusion things. Again, public sector comes on board. When you want to go into areas where there's no banking and spread in banking. So there are some roles that public sector banks do play, which private sector isn't burdened with.
Small banks, small finance banks and microfinance are doing a reasonable job in pockets, I agree, on rural lending. The rule currently also is that for every 3 branches in a banked sector, every bank, not just public sector, even private sector banks, have to open a branch in an unbanked area. You know, there are many ways in which the government has proceeded in inclusion. Therefore, will you advise the government to seriously consider bringing down ownership?
Should we? So, well, first of all, there are various ways of achieving. Even if you, let's say, we decide that 70% is way too much for the government to own, and you need to. There are several ways of achieving this. One of them is, of course, this can happen organically, i.e., the more efficient private sector banks or foreign banks or whoever they are, or even NBFCs for that matter, grow faster than these public sector banks. Some of them which are under now sort of being, the RBI is directly managing them, as you may know, currently will essentially be restricted to some form of narrow banking. So their growth will be restricted and so on. So they can be, one way of going about it is organically let one side grows just by virtue of being more profitable, efficient, etc. And this rebalancing happens. So that is one way of achieving it. The other ways can be, I'll give you one example. You can have, for example, our corporate bond market needs to grow. Okay, it's grown, but it's still quite very lightweight. And here, the point is, we could seriously begin to think about the frameworks required for it. One obvious one, where incidentally the government should begin to pay some attention, is to create a much more liquid, risk-free yield curve. And then there is the issue of nationalized and not nationalized. They have, for example, the old nationalized bank, but then you have IDBI, which is a government-owned but not considered a nationalized bank because it functions under a different act. So there is a variety of menu of options. So all of these options should be debated, and the government should consider them and act on them as things go.
Now, will IDBI be an experiment for the government?
Well, I'm not in a position to comment. I will let you speculate on that, but my point is a very simple one, is simply this, that there are many options and permutations of things that need to be done and can be done. It's not like only one or the other.
No, is there any
combination can be done. There are many shades of grey in this, and it's a combination of these that could be looked at.
No, I brought up IDBI because the government itself, both Arun Jaitley and earlier Jayant Sinha have spoken about IDBI being an experimentation.
I am not in a position to make any announcement on this issue, but I'm just pointing out to you that there are a large menu of options, and some combination will be carried out.
Is it at all possible that the government will consider bringing down the stake in any of the public sector banks?
This is, as I said, this is not something we are looking to do immediately.
Okay.
I think the finance minister had also made a comment to that effect. But as I said, a public debate on the matter is always welcome, and we are a feedback-based government. If and when the public debate throws up various interesting options, they will be considered.
Okay. But why the resistance, you think, whether it is the NDA formation or the UPA formation, there is tremendous resistance to reducing government stake?
Two things. One is this the right time to do it when there are much more pressing and immediate issue?
Okay.
Two, even if you want to do it, you have to first clean up the mess and get this train back on the rails before having the wider debate.
Okay.
And yes, there needs to be a wider debate, perhaps, but that debate need not wait while we are cleaning up and getting this system going again.
All right, Sanjeev, thank you very much for joining me in this discussion. So quite clearly, government at the moment not looking at reducing its stake in government banks. That's it on this edition of PSB 2.0. Thanks for watching.